Live from the KC Property Guys and KC Pier Studio in beautiful Kansas City. Home to over 200 fountains and more barbecue restaurants per capita than anywhere in the nation. It's the Kansas City Real Estate Industry Leaders Show, a show about industry leaders from the local Kansas City metro market for Kansas City real estate related professionals and enthusiasts like you. And now, here's your hosts, Eric and Lucas Scheele.
How's it going, everybody? My name is Lucas Scheele, and welcome back to the Kansas City Real Estate Industry Leaders podcast. I'm here with my co-host, Eric Scheele, as well as Ben Kalny from Axiom Equities. So, Eric, you want to just start us off?
Yeah, you bet. So, Ben, good to have you in the studio today.
Glad to be here. Thank you, guys.
Yeah, you bet. So we sit down and we talk shop every week, right? We do it three ways. We talk to Kansas City real estate industry leaders, which Ben is, and we'll tell you about him in just a few minutes. But we also talk KC Property Guys, and we talk KC Pier and Foundation issues. And so today we have the pleasure of having Ben from Axiom Equities, and we're going to have you kind of talk shop with everyone, and sure. We really kind of start and talk, well, what's your background, how'd you got started, if you can give us the elevator pitch, and we'll kind of go from there.
Sure. Well, I started investing in real estate after I got out of law school. I went to an expensive law school, and I always knew I'd come back to Kansas City. I got back here, and I said, gosh, I got to figure something out. I got a lot of student debt. So started looking at real estate and began investing on my personal, just for myself, and quickly realized that it was a good fit. I enjoyed it. I found it a challenge, and it was fruitful. So I was pretty early on. I got pretty aggressive in my investing. And
you bet. What time period was this?
That would have been in the mid-'90s.
Mid-'90s. Okay,
yeah.
So we're rolling it back 20, 30 years.
Yeah.
Mm-hmm.
Hard
to say, isn't it?
The number gets bigger every. It's crazy how that works.
Yeah, but that's interesting because obviously Luke and I talk cash investor real estate. We talk real estate, quite a bit, and to find someone out of college essentially saying, hey man, I want to get into this real estate game. You're kind of the exception of the rule. You're ahead of the curve.
Yeah.
Most of those guys that we see jumping in and we get queries from online, they're kind of mid-40s and they're like, man, I want to dabble. I'm finally financially secure. You're the opposite way, man. You're like, I got debt. I want to go maybe in more debt, but I know this is a winner. And so that's kind of brought you to the table back in the 90s, huh?
No, I tell you, necessity is the mother of invention, And I
there you go.
I tell folks the first house I bought, my student loan payment was more than my mortgage.
No way.
That's when I was like, I need a bright idea. I got and a shovel to dig myself out of this. Yeah. So I got to figure some stuff out.
Right. That's fantastic. So you're investing in the 90s in Kansas City specifically?
Yeah. Kansas
and Missouri side, or focus on the Kansas side? What was your flavor?
Yeah, I've always been a proponent of good, and let me just preface by saying I'm a firm believer in everyone has their own path and their own philosophy, and I strictly invest in Johnson County. That's been my general, 90% of my stuff's in Johnson County.
Mm-hmm.
That's just what I like. That's what I know. That's where I grew up. I have some other things I don't do Section 8. Nothing wrong with it. I know lots of guys who are a lot smarter than I am who are doing very, very well in Section 8. Right. More power to them. Different areas. Everyone has their own focus. I try to stick to what I know and not get too cute. Mm-hmm. So I generally I'm a long-term investor. I don't flip. Buy and hold investing is kind of has always been my thing.
Yep.
So I try to buy in good areas that I think are going to be basically the same or better in 20 years.
You bet.
And just buy good, solid real estate, not sexy stuff, but just steady stuff.
Well, I mean, what you get there is you get stability, and with stability, you probably get some return on the investment that it's going to accelerate at least over time at a minimal pace at best, accelerated to a really nice pace to where you have, some built-in equity. But when you built in, people talk about classes of homes and A and B and C and D class homes, and some people just make their living, like you said, kind of in those C's and D's and Section 8s. And,
Absolutely, yeah.
And the other underlying message here, which, we talk to real estate industry leaders. Axiom Equities is an extremely successful Kansas City acquisition multi-family firm here with private investment, correct? And you also do personal investment. This is kind of your path to leading to what you do today, correct?
Yeah, that was, I was one of those guys that I had a lot of, I got deep into real estate. I went big for a little guy like me. I mean, I leaned into it, and I had several dozen rentals in Johnson County, and I had a full-time job, and I had a manager. In fact, one year it was kind of funny. I looked what I paid the manager, and it was almost what I made. I was like, wait a minute, I'm not sure that's a good idea. I was trying to unpack that one, but
yeah.
But I was deep into it, and I got to a point where I really, my friends, I talked about it all the time. It's my life work. It's my passion. I couldn't go to a cookout without someone saying, hey, if you get a deal and, I'd love to throw some cash in, and, if you're looking for a partner or whatever.
Yeah.
And so my business partner, John Emanuels, he approached me and said, hey, look, let's just make a business out of this, and let's provide a path for, we can still do our own stuff on the side, which he had a very similar situation that I did. But he said, hey, look, let's provide a path for just the regular guy who says, I know I need real estate in my portfolio, but I don't want to deal with leaky faucets, and I don't want to try to crack the code myself.
Absolutely.
So that was about it was 10 or 12 years ago. And so we've on the Axiom Equities side, I have my own personal stuff, and then on the Axiom Equities side, we invite folks to co-invest with us on cash flowing real estate. We joke with ourselves, we like old, ugly, and full apartment complexes.
Great mantra, right?
In good locations.
And obviously works, right?
It does, yeah. Well, it's, we're thankful as can be, but we've got about 150 investment partners, raised not quite $100 million. And our portfolio, we've got about 30 projects around the Midwest. Our portfolio is not quite $250 million. So
you bet. Did you ever think, back in your 90s, when you're investing in Johnson County, and just following the passion, that it would lead to something like what you're doing today in a multi-investor environment? What's interesting and is that my motivation was more a safety, kind of a backup. My view when I started, I'm not a cash flow. I mean, cash flow is like oxygen. You got to have it to live. Right.
Yeah.
But for me, that's not the motivation. I don't go into a project. I mean, even from day one, I didn't go into a project saying, hey, look, I can clear off $400 a month off of this and, go buy a jet ski or whatever. That's not how I think.
Right.
My view is to slowly build wealth over time. So that was kind of my motivation
You were ahead of the curve. Did you realize that then?
Well,
because you can, I assume you can
way
look
ahead.
back and say that yeah, I probably made some smart choices in that thinking. Whether it was a mentor that drove you in that direction, you were smart enough to ask, or he happened to fall upon you, or you actually just organically had that thinking. You were ahead of the curve at that age. I just find that intriguing. Because you don't even see that thinking with a lot of these middle-aged investors that are just simply, like you said.
Like the new year investors. Oh, it's a new year. I'm going to dabble in investing.
Right. And the questions they're asking out, and you go to social media and you really get misdirected. You really got to I've heard a lot of underlying messages, and I hope people that are listening and watching kind of listen between the lines, because we were talking about that off air earlier, that we were just kind of listening to people between the lines. But I've heard, and I'm repeating this just to bring out the obvious, is do what you do and do it well. Follow your passion, and you don't need to divert.
Yeah.
Right? And that'll in its own will play in your favor over time, is what I'm hearing. Right? And you just, like you said, you just happen to maybe do, Johnson County Class A's, B's, but at least the stability channels, but there's other people that that dabble in other particular areas as well. Right?
Yeah, absolutely. I'll bump into people all the time that are in tranches that I don't go near, and they're extremely successful, and they've kind of got their widget, and they know how to do what they do. We talk a lot in our shop of just having a sobriety about your limitations. It's real. If you're good at one thing, sometimes it's tempting to think, gosh, I can go do this or go do that as well. And that may be the case, but I think it's a healthy posture to say, hey, look, I've got, I'm decent at a couple things.
Yeah.
Be careful about having a high opinion of yourself as you
Right.
Kind of hone your craft first.
Absolutely, yeah. And when you find something that works, I tell guys all the time. A lot of guys you see it a lot in real estate where they'll focus on even as specific as a single neighborhood or a few neighborhoods where they just know every property.
You bet.
They know exactly what they're selling for, and that's wise. And I think you can't limit it too much. You got to be broad enough to have enough opportunity that'll satiate your appetite, but. You don't want to. I don't have any business buying retail in Milwaukee, right? I mean, that's not my thing.
But some people do.
Yeah, absolutely. Yeah.
Right.
Yeah.
And some people do, and we see that Kansas City happens to be a hot market, and we kind of talk about that. We probably expand on that a little bit, and we see a lot of out-of-state interest, and maybe you probably do. I would assume from the investor level.
Absolutely.
Right, have a lot of out-of-state. All these 150 private investors you have, there's probably a large contingency of interest that are not necessarily located between the hour's drive of Kansas City.
Oh, absolutely. Yeah, and I think there's a perception of Kansas City, and anyone who looks at real estate in Kansas City and has for example, family, in another market, you can call and say, hey, look, there's a 4-bedroom home here for $250,000.
Right.
And they're saying, you got to be kidding me. How,
Yeah.
what is that? So we have a real value, an environment where there's a lot of value in Kansas City. So I'm super high on Kansas City right now. A lot of my motivation for going so aggressively into real estate early on is when I moved back to Kansas City. I went to school away, and when I moved back, I looked around and I saw what you got for the money.
Yeah.
And I use the phrase a lot. It's like a pound of flour. If you buy just kind of a boring house in a boring, neighborhood, and it's just kind of right down the middle. And
Yeah.
But it's like a pound of flour. People still need a place to live.
That's true.
And that's how we think. And when I came back to Kansas City, I looked around. And
You're on one of the coasts, I assume.
I was in Virginia. Yeah.
Okay, so you're looking at coastal prices.
Yeah.
Coming back to Kansas City, you've already valued your Virginia perspective.
Right.
You have the real estate interest, and then you're looking at your pound of flour, the house, saying it's all aligning. My
Still a
interest
basic
aligns,
ingredient.
the
Right.
commodity aligns, the value is there.
Yeah, and I've been to all 50 states. I travel around, and my natural affinity, I can't roll into a town without stopping by the real estate office
Right.
and looking. I can't go to a different country and not look
we
and
do
say,
the same thing.
how much is this
Of
cost? I mean,
course.
it's just the
Yeah.
way you're wired, right? So here I bring in this just weird affinity for trying to figure out what things cost. And when I come back to Kansas City after law school, I was like, golly, Ned, this is an amazing place to live. It's centrally located. The value's incredible. And so that's what led to, I really asked myself, where else can you get this? And the answer was, there's not many places where you can. What's really interesting is, I've never said this over the last 25, 30 years, but I see that happening now. I think everyone says, I can't believe it. Real estate, my house down the street just sold for X. I could have bought it for whatever,
Right.
3 years ago. I should have bought it. We've gone up on a big run, which is true. And, no one has a crystal ball, but my gut feeling is, you look at Denver, look at other areas, even go up to a smaller market like a Des Moines or whatever. Look what you get in Kansas City compared to, the Austins, and comparing us to Kansas City to Austin and Denver, 15 years ago would have been a joke, but Kansas City's coming along.
Yes.
We've got the River Market. I look at downtown. I look at the crossroads. I look what's happened on Strawberry Hill. When you see these areas, I think the West Bottoms is up and coming big time.
Oh, yeah.
Look at North Kansas City.
Yep.
North Kansas City 10 years ago, I wouldn't have touched with a 10-foot pole. Well,
Yeah.
people who did, they're probably on an island with an umbrella down.
But
Actually-
you're also saying, though, in retrospect, in its current state, it's still
Absolutely.
Very attractive.
Well, yeah, I mean, when
You're
you
still highly motivated. I mean, you're getting excited about just talking about these areas because you've already compared these to these other markets, and I know that because we've actually talked quite a bit offline about some of the other markets that you've kind of entertained, but you're always refocusing right back here in Kansas City. The appetite stays high.
That's right. I mean, when my original emotion of coming back to Kansas City after going off to school and kind of looking around and traveling a bunch was, wow, you get a lot for the money.
Yep.
Now, the numbers are a lot higher, but my emotion for the first time in decades is, again, wow, you get a lot for the money. It's a hell of a lot more than it was 3 years ago. I get that, or 5 years ago, or 8 years ago. But still, if you pick a suburb, pick a property that's appropriately priced, and go look at other markets. Go look at other MSAs and see what things are trading for, whether it's in a multifamily asset or whatever. You get a lot of value in Kansas City. And what's most important, I think, is we have a ton of momentum in Kansas City with all this stuff going on with the streetcar, with the music scene, with the food. The food scene is legit in this town. It wasn't 15, 20 years ago. I mean, it was just kind of, we had a couple of guys, fighting the good fight, but now we've got a lot of great options. So I think Kansas City is a great place to be. I'm thrilled to own property in Kansas City. We're actively looking. There are a lot more dollars chasing properties here in Kansas City because the word's getting out. Probably not helping that the word's getting more out.
It does. But let's talk about that a little bit, and let's talk about the current state of what you actually recognize as an investor, whether it be multi-property or even single properties. I mean that's something we talk about. It's our shop, but I'm always interested to hear someone else's take on it.
Like what you hear so far? Make sure you never miss a show by clicking the subscribe button now. The podcast is made possible by listeners like you. Thank you for your likes, shares, and support. Now, back to the show.
Clarify your question.
I'm more in tune with what's your take of status of the interest, with not only the interest in the market, but where do you think this is going overall with the added interest and the competition, whether it be at a multi-property level, the hundreds and up, and we talked about this a little bit before, the 50s or so, the 10s and 20s, even down to the single. Is it kind of cohesive and congruent where you can see similar interest and competitive natures, or do you see some segregation based off of your plays at duplexes or single families, or even the 100 property?
That's a good question. What we typically do at Axiom Equities, we focus on generally 100 to 200 units. That's a ballpark call, but basically that's our jam, man. We love that stuff. We like old, ugly, and full. We like B and C assets in A and B locations. I can fix ugly. I can't fix neighborhood.
That's true.
Great.
That's very true.
Extremely wise.
So we'll go into the best neighborhood we can, and we'll get the ugliest thing we can find and buy it, clean it up, and create an environment.
You're a huge fan of the Mansford front.
Yeah.
Give me the 70s, right?
Bring it on, man.
Where's the orange doors?
That's right.
Okay,
yeah,
I'm good.
We can fix that. But that's our deal. So we'll go in and do that. But what we see, to answer your question, we typically focus on 100 to 200 units. That's kind of our sweet spot. What we see is it's a little larger than your typical mom and pop investor. So there's less activity, but then it's really smaller than the big boys want to run. Most shops that do what we do are, 8, 10 times, 20 times our size. We're a little they don't even know we exist, which is fine, but we're very under the radar, boring. Just kind of steady Eddie, not real sexy. So what we aspire to be is just kind of in that middle ground where it's too low for the big boys to fiddle with and a little bit of a stretch for.
It's a good thin air.
Yeah, we're well capitalized, so that's a big sales point if you're going against a smaller investor.
Definitely.
Because we have a track record, we've always closed, we've never not funded a deal. I mean, our track record's quite good. So. And the broker community knows that. So when Axiom Equities puts an offer on something, it's a real deal. So and we protect that. That's part of the deal. But then as you get below, to further answer your question, you get below 100 units, then you start opening up to that investor that aspires to do more. And it's not uncommon. And we see a real disconnect in the pricing in terms of it's all over the board. I always give a word of caution to the guy who has 3 duplexes and now all of a sudden he's going to jump into a 48 unit deal.
Oh yeah,
It's
definitely.
really luring because you want to say, man, I used
Economies
to,
of scale are there,
yeah,
right?
yeah, yeah.
And it's all roses.
yeah, but generally speaking, 100 units is where you can have a full-time on-site manager and a full-time maintenance guy where the volume will support that. So that's a general rule. I mean, we have properties with 80 units or even I think one with 65. So there are certain circumstances, and you can combine. If one's down the street, you can kind of combine resources
absolutely.
and share.
Yeah.
But I just have, and again, there are plenty of folks who are quite good at it and make plenty of money in the 24 unit, 36 unit.
You bet.
More power to them, and God bless them. That's awesome. That's not our deal, and we're not good at that. But I always have a word of caution to those folks because you really want to think about, what is the expectation of on-site help? And if you have a 16-unit deal in Midtown, you don't have an office where you can go in and say, hey, I have a leaky faucet. How can I,
Right.
And so efficiently addressing those concerns in that context is a thing. I mean, that's not for the lighthearted. And so there are folks who do it well, and there's a lot of folks who try. And it's it's a really tough way to people do it, and guys are quite good at it, and very smart folks succeed in that space. I'm not one of them.
Well, it's tougher when it's a single guy trying to do it on its own, or a single person entrepreneur trying to do it on its own versus someone who has multiple properties already and are replicating in that similar area. Then the economies of scale and his resources internally begin to work in his favor financially to be able to support that 20-minute drive from A to B and still not necessarily have those on sites support staffs. And so probably some of that is working, but a really good point where in terms of you're finding that your thinner air and you're finding your niche versus scaling it down, it just becomes a little bit more reachable for the average investor. So the numbers begin to not work necessarily for you guys, which makes a lot of sense because in this HGTV world of investment that we live in, where we have a lot of weekend chasers and people dabbling, that only kind of escalates up, and I could easily see that inflate and not formulate out to be a very dangerous water is what I'm hearing.
Yeah, well,
for someone to kind of dabble into and really find out that a year later they made a critical mistake and their investment days might be close to waning out.
Yeah, well, Eric, early on, I think I mentioned to you, I had a mentor and a fine gentleman who was kind enough to share information with me when I was getting started, and he had over 700 rentals, and they were all duplexes.
Mm-hmm.
And I'm sitting there thinking, I was reasonably new, and I was like, well, why wouldn't you get into strip malls, or why wouldn't you get into apartment complexes, or why wouldn't you? And he's a brilliant guy, very, very wealthy, fine individual. And he just said, look, I know duplexes. He goes, I know how to do it. I know how to make money in my sleep.
Yep.
I know where the gotchas are.
Yeah.
Why recreate the wheel? And
do what you do and do it well.
And what a beautiful example of a guy who says, look, this is my sweet spot. I'm going to stay in my lane.
Yeah.
I'm not going to try to be everything to everyone. I found a drum. I'm going to keep beating it. More power to him.
Well, but to be exposed at that at a young age and actually see it in working and being a smart guy, like, well, if it's working for him, it's got to work for an average Joe like me,
right.
and you put it to practice. And that's fantastic stuff. You ready for some, we always kind of end things with some local Kansas City. We're Kansas City real estate industry leaders podcast.
Sure.
And so we like to talk some local KC stuff.
Sure.
And so being in Kansas City, we always talk food, but we always talk about this too. No offense against Olive Garden, no offense against Red Lobster.
Cheesecake Factory.
No offense against Cheesecake Factory. We love you guys, but we
Applebee's
also
too.
talk about the niches. All right. So you're a property guy. You're driving around the city. You're looking for properties. You got to be taking clients and investors out to lunch. We're assuming that you kind of know some secret spots that you could share.
Restaurant-wise?
Yeah.
Boy, there's a lot, and of course it depends on what I'm up for. I'm a huge fan of Lulu's noodles in Crossroads there. They also have one, I think.
Noodles and Crossroads.
I think they have one in Westwood, or it'd be over in Westwood.
We just saw something on the Crossroads today on YouTube.
They've got a
It's
peanut
up and coming. Remember?
Oh yeah, it's very up and coming. But they were talking about graffiti.
Yeah,
you know,
graffiti issues out there.
tagging some issues down there.
Yeah.
City's coming down on them, but yet the city's not necessarily acting, and so there's this little
ongoing argument between just small business owners and just the taggers, because they see the same ones in certain spots, and apparently there was like 1,150 reports made or something, and only like 20 something were getting acted on by the enforcement down there. So that's pretty crazy.
Mm-hmm.
Lulu Noodles.
Lulu's Noodles.
Yeah, that's a good.
Is there a number 2?
Oh man, there's a bunch.
Yeah,
I got the chassis to prove it. I'm not gonna blow away anytime soon.
Yeah.
Oh gosh. Let me think. Well, the barbecue's great. You know,
it's always a fallback.
I like Taco
you know,
Republic. Taco Republic's good.
Nice. Is this this in near Westport?
Yeah, that's off of 47th.
Yes. Yeah.
Yeah,
Right
that's a
across
good
from a
spot.
great barbecue place.
Yeah,
that
yeah.
Can mention quite a
Okay,
bit.
Joe's.
Yeah.
Or what do they call it? Joe's KC now, I guess.
Joe's KC. Yeah.
Yeah,
Absolutely.
Yeah.
Okay, we talk events. What's your favorite You're a Kansas City guy, right? You've been here all your
Yeah,
life,
gosh,
except for
there's-
law school. So what's your events? What do you like to do?
American Royal's great. I mean, that's a big thing. I'm a terrible golfer, but Lake Quivira Country Club has a great member guest tournament. That's a
right
blast
on.
with a bunch of. A lot of the guys are really good. I'm terrible, but they're nice enough to. It's a fun enough event that a knucklehead like me can go have fun. So I like that quite a bit too.
Excellent.
That is fun.
Royals moving. You saw that, right? I said him as a property guy. Did you see that?
The
American Royals got that property
yeah.
out in western Kansas City, Kansas. That's
when you said I thought you said Royals are moving. I
Oh
was like,
no,
wow,
Royals are here.
No, we're losing
American
baseball, too.
Royal is
Man, that would
moving
be a big
west.
bummer.
It'd be interesting to see Kansas City,
Yeah.
Kansas. Talk about just in terms of from the 90s to today, and you look at that
Unbelievable.
area and the legends and the sprawl that place has had is absolutely unbelievable.
It's unbelievable. Well, and the unified government just in general. I mean, they've done a great job, I think. I mean, I love I have not invested a nickel in Strawberry Hill, but I have a number of friends who have.
Right.
What a great example. What a beautiful property story for the guys. I've got a handful of friends that have, they went strong into Strawberry Hill, and man, that's just caught fire. North Kansas City, same. I mean, I love those stories, and I'm inspired by them. I love watching a guy just go, or a gal, just go kill it on a so but Western Wyandotte counties, they're doing things right.
There's a lot of good stories, and that's one of them. Well, we appreciate you having coming in the studio,
Happy
chatting
to,
with
guys.
us.
Enjoyed it.
Great knowledge. I hope for the average listener that you can read between some of those words, because there's some wise real estate investment advice.
Absolutely.
So appreciate you having in.
Yeah, thanks so much for coming out here.
You bet. You want to wind us up?
Yeah, absolutely. So we just had Ben Kalny in here from Axiom Equities. We're just going to wrap up this episode, and we're going to see you guys on the next one. You guys take care.
Take care.
Thanks for joining us this week on the Kansas City Real Estate Industry Leaders Show. Please support all things local to Kansas City. And hey, be sure to subscribe and share our podcast on Facebook and LinkedIn. This has been a KC Property Guys production. KCPropertyGuys.com.